Hi there, welcome to Kneppy Invest and welcome to September 25, 2024. My car had a service, a yearly service, not a monthly service, yearly service this morning, put it in at 7 o'clock, received it back at 10:30, went for a run and a walk, and that means before the markets had opened, I did not have a look at the announcements at all. And a few companies did release their financial results, including Premier Investments, KMD Brands, Sigma Healthcare, Fonterra or something like that, did release financial results. And I will feature three of those companies in my top 5 stocks of the day. Overall, the market generally flat. However, tech is down. But on the flip side, resources, another absolutely stellar day, up 2.84%. And I wonder if that's because of what's happening in China, talking about oil wobbles as China stimulus mold. So that would probably imply that maybe iron ore companies have had a good day. I know Fortescue was up a fair bit, but they did release an announcement. So possibly the strength in the Australian market today has been again led by iron ore companies, but I'll confirm that in a second or so. Okay, the agenda for today's video. Go through the best and worst performing sectors, indices, and also companies on the ASX. We'll also have a look at the top 5 stocks of the day, and then might have a look at a few charts, maybe have a look at a few presentations, possibly have a few or answer or look at a few of your comments. And I also should mention CPI hits a 3-year low in Australia, down to 2.7% year on year, compared with forecasts of 2.8%. So in fact, inflation is in the sweet range right now, the target range of the RBA. And I don't necessarily think they should decrease interest rates, but without doubt, they won't increase interest rates. So I think that's almost certainty right now. The worst thing central banks could do is decrease interest rates too quick, and then we might get another burst of inflation. And that's exactly what happened in the 1970s. And I do like this Trading Economics webpage. I was just going through it earlier, and I really like that they list all these companies or countries, not companies, how they're performing. GDP growth, interest rates, inflation rates, jobless rates, government budget, debt to GDP, current account, and population, and as many countries as you want, it seems like. So you can just see what's the worst company. I just want to say country in the world. Oh, this is ranked by GDP. Where's Australia? Oh, it's about 14. 14th biggest country in the world by GDP, and every country above us has significantly greater population apart from Canada, 14 million people more. And the next country down that does have less or lower population than us is actually Netherlands. And then we also have Switzerland, not surprising there. Anyway, I was just going through this website a little bit earlier in the day before I started recording this video, and I like it. I haven't really looked at this website all that much. Maybe I should be doing that a little bit more. Okay, I'm rambling on a little bit. Let's get to the ASX today. I just want to see if financials have had another bad day. And that would explain why resources have had a really good day, but the XJO is actually down slightly. So let's have a look at the best and worst performing sectors. All staples have had an okay day, up, so maybe a little bit of rebound in Woolworths and Coles. Materials up 3.1%, and down the bottom there, financials down 1.77%. And if we have a look at the XJO, no, not the XJO, the XTL, the ASX 20, down 0.13%. I'm going to open that up and just see if what I'm thinking has happened. Just because we're thinking something doesn't mean it is actually the truth. It could be influenced by falseness or influenced by misbelief or biases that could be wrong. And so I just want to see if iron ore's had a really good day, BHP, Fortescue, Rio Tinto, and all the banks are down. And that would make sense because financials have had a bad day. So let's check. And I'm going to say 7 companies up, 13 down. Well, close. 8 up, 12 down. And the worst performing companies, there we go, banks. Another bad day. And this also increases my belief, possibly, just possibly, there's a bit of rotation going on. What I'm going to do is have a look at some of the banks' charts. Yeah, why not? I'm not sure if I look at all of them, but just to see if there's anything to be concerned about the banks. Aristocrat, Macquarie, QBE, REA Group, all down by over 1%. And on the flip side, there's Fortescue, Rio Tinto, BHP. So iron ore companies have had a really good bounce over the last few days, which is interesting because iron ore hasn't had a big bounce. So possibly the market is getting a little bit ahead of itself. The one company I am looking closely at is Fenix. See what the share price is, 27.5 cents. So it is interesting. So this is iron ore. I'll just show you iron ore's chart. Yeah, not much of a bounce with iron ore at all. In fact, it's going sideways. So there is possibility that the market is getting a little bit ahead of itself, and I'm not seeing any change in trend with iron ore at this point in time. Maybe the market is right. Maybe we will see iron ore starting to go up from here. Anyway, let's go back to the ASX 20. Other companies here, yeah, Woolworths had a nice bounce. Wesfarmers and Wes Coles. Did I go past Coles? No, Coles is down. I can't find. I'm pretty sure Coles is in this list, isn't it? Maybe Coles is not in the ASX 20. Well, there you go. I learn something every day. Okay, so let's get to the best and worst performing companies on the ASX today. See if I've missed anything. And there's a good chance I have missed something. Missed a small mining exploring company that released absolutely brilliant results, drilling results, not financial results, drilling results. So let's have a look to see if I have missed anything today. And just by percentage change, the answer to that is no. So most of these companies are on a good percentage change on fairly low turnover. And when I say fairly low turnover, I'm talking about turnover below $100,000. Now, the only exception there is Labyrinth Resources, up 26.92% on $301,000. So let's have a look at this company, LRL. I'm pretty sure this company popped up the other day. In fact, because I'm pretty sure I mentioned David Bowie for some reason. And they did release... No, they're doing a capital raising or something. Title off a booklet released yesterday. And they did release the review of historical Vivian and Comet Vale databases on the 13th of September. I have a feeling this is just, I wouldn't call it noise, but the share price of this company is in an uptrend. And on occasion, when share price has moved into an uptrend, you will, on occasion, see the share price rally a fair bit on no news flow. So let's have a look at Labyrinth Resources. Is that true for this company? Yeah. Not only that, share price dipped a lot the last few days. So share price ran up after that announcement on the 13th of September. And the last few days, the share price has dipped a lot. In fact, share price went from 2.5 cents down to 1.3 cents, so it halved. And this is just some sort of rebound after that. Now, the thing I do like on the decreasing share price, have it on fairly low volume, comparatively speaking, particularly compared to today. Today, some really good volume has come in. So interesting goings on with Labyrinth, but I wonder if I've got this in my watch list. Yes, I do have this in my high volume spec, but nothing really to talk about when it comes to that company. And otherwise, yeah, it's there's a company called Great Boulder Resources up 16% on fairly big turnover. I suppose we could have a quick look at this one, GBR. I don't know anything about this company. Did they release anything today? They did. Exceptionally high grades in RC drilling at Mulga Field. Interesting enough, they did not put what these high grades were in the title. Sometimes you will see that. In fact, a lot of times you will see that. So let's see what they consider exceptionally high grades. And I suppose multiple high grade intersections with grades up to 194.5 grams. That is high grade. But it could be over like 1 centimeter, and maybe that's not that big. But they're talking about drilling hits like 5 meters at 43.13, 6 meters at 20.52, 2 meters at 102.8, and there's that 194.5. It's over 1 meter. It does look interesting. It does look pretty good. Now, you would like those depths to be a little bit longer. So if they did have like a 100 meters at 194.5 grams per ton, this could be one of the greatest hits ever, I'm assuming. So the depth is important, the grade is important, and how deep it is important as well. So let's have a look at the chart for GBR, Great Boulder. I wonder if they have wonder if their operations are in Colorado, near Boulder, or maybe their operations are near a really big rock, or as we would define it, as a boulder. Anyway, let's have a look at the chart. Was it GBO? Great Boulder resource. Is this a reason to get excited? Not necessarily so. Share price in a downtrend. Nothing much happening. Share price drifting lower. Shareholders getting a bit annoyed, so getting a little bit bored or sick of the share price in a downtrend. And today we have seen share price pop up on pretty good volume, but there's going to be selling pressure. And we have seen seller pressure on the share price today. It has been as high as 6.5 cents. Now it's down to 5.7. Yeah, so this is what you would expect when the share price is in a downtrend. Best time they can release an announcement like this is when the share price is going sideways, or is it an uptrend? Let's move on. Anything else of interest here? Iperionx, up 14% on 3.9 million. The market cap of that company is 874.25. In the past year, the share price of this company has gone up 133%. Pretty sure this company is not even generating any revenue just yet. I've not had a look at this company in the past. They did release an announcement the other day, which I completely mixed. Iperionx executes sourcing contract with global automaker. Did that cause a ripple? Not really. Share price up 1% that day, 2% the next day, and 14% today. So let's have a quick look at the chart. And I have a feeling this chart is going to look pretty good. Yeah, this chart is a really good chart. And I've put an uptrend line in there, and this uptrend has been in place since the start of 2023. Share price back then was about 90 cents. Now it's 3.35. So nice 3 to 4 bagger in a fairly short period of time. And this is a nice looking chart. My only concern is the share price has really taken off the last few months. Share price has almost doubled. So obviously the market is getting a little bit excited about this company right now. Maybe for justifiable reasons. I don't know, because I had known nothing about this company. The only thing I know, this chart looks really good. Iperionx. To justify the current market cap and valuation, the company needs to produce some sort of revenue profit in the next 5 years or so. That's just my opinion. Okay, now let's have a look by market cap, see if there's any surprises here. You have Mineral Resources. They did release an announcement, but it wasn't a positive announcement. I would say this is just running because of iron ore, because their announcement today was just their acquisition. What do you call it? The divestment of that haulage business has been completed, and usually that won't cause the share price to run up. So I'm just thinking this is a completion of Onslow Iron Ore Road transaction. I'm just assuming this is based off just iron ore. A little bit of excitement in iron ore, and Mineral Resources share price has increased. Well, it has increased about 38% in the last few weeks. Yep. Now, I'm not saying trend has not changed. The share price had fallen a lot before this. This could be just a dead cat bounce. The other thing to note, the volumes have been decreasing as the share price keeps going up. So there's less interest, or lower and lower interest, as the share price keeps going up. I would expect that eventually the share price will start to go down again. A lot of volume coming in near the bottoms. When the share price got to about $30, we saw a lot of volume coming in. So obviously $30 was an important level for many investors out there, maybe many institutions, fund managers, that sort of thing. And you definitely see a bit of a spike in volume when the share price got to those levels. Even below about $34, $35, there was increased volume. Now that volume is starting to dry up, which is telling me there's less interest now in Mineral Resources, even though share price has rallied today. That's rallied on fairly low volume. That's very important. What else do we have here? Champion Iron, there's Iperionx, Vulcan Energy. Nothing here of note. There's Webjet Group, up another 13.95%. Visan, not disappointed with that because I'm a shareholder. Sayona Mining did release a presentation. Seems like there was an ASX mid-small cap presentation event on today. And because there was quite a few announcements in regards to this. This is why I said maybe I'll go through a few presentations. Yeah, ASX Small and Mid Cap Conference presentation. I'm just going to Google this just to see ASX Small Mid Cap Conference. I hope that's it. Is that today? Yeah, that's today. And these are the companies. So quite a few companies did present today. Oh, they've also got agenda. So we're talking about Drone Shield, Emiko, Sayona, Aroa, Botanics, Biocal Diagnostics, Acrux, ECS Botanics, fairly small company, That might be the smallest company here, although example, Microba, Dropsuite, Findy Group, Premium Tower, Achira, Guzmani Gomez, Article, Elsight, and Aerode. Okay, there's the agenda. I wouldn't be surprised if all these companies release an announcement today. So let's pick one by random. No, let's do this let's pick one by random. Let's pick a company. Let's pick Aerode. Did they release their presentation today? Let's have a look. Yes, they did. In fact, yeah, 7:30 a.m. Let's pick another one. ELS, Elsight. No. So not all these companies released a presentation. Maybe they should. I would expect maybe they all will. And funny enough, although they did release an announcement today, Elsight wins the largest order with leading defense contractor. Maybe that's why they didn't release their presentation, because they released a good announcement. The share price is up. Let's have a look at the chart for that. No, let's have a look at the chart. ELS. No, I'm not interested in that. Otherwise, I'm going to move on to the worst performing companies. I notice Hillgrove is down the bottom there. That's copper. And copper's had a really good day. I know that. So let's have a look at copper. Quickly have a look at copper. Where's copper? HG1. Here it is. So not really today. It was yesterday, or the last 24 hours. I don't know when the day ends, but copper was up 3.3%, and copper is now moving into an uptrend. It looks pretty good. And on the flip side, you would expect copper companies their charts starting to look really good as well. There could be a bit of a delayed reaction. So this is Hillgrove, and it's starting to move up now. But I would expect Hillgrove share price to really rally if we see copper prices continue to go up. Anyway, so let's move on to the worst performing companies today and see if they've missed anything. Not really by percentage change. Most of the movement is on companies with low turnover. Nova Minerals down 12% on 284,000. We'll have a quick look at this one. Nova Minerals. And they released something yesterday, announces pricing of 2.15 million NASDAQ offering. I'm going to call this a bit of noise for Nova. We'll have a quick look at the chart. Why not? Quick look at the chart for Nova Minerals. And in fact, the chart looks terrible. Chart looks pretty terrible. The big volume coming in, maybe that's to do with the listing. Let's move on. And apart from Nova Minerals, until we get to Premier Investments, who did release results today, share price down 10.54%. Other than that, nothing else here. Very low turnover. So this is just a bit of noise, I'm going to call it. So let's have a look by market cap. So we have Premier Investments. Setup, not surprised that's down. After a massive rally yesterday, a bit of a short squeeze with the shorters, and the share price ran up. There was an article in Capital Brief, whatever it's called, talking how the share price of Cetire's, how the share price increase yesterday in Cetire was record or something. Anyway, no, I don't want to do that. Capital Brief. I want to open up a new page. What did it say? It's something on the left. I remember seeing it. Here it is. The shorts got torched. Epi squeeze sends Cetire shares soaring. And in the article, but that 79% gain in Tuesday session was one for the record books. So not surprising to see a bit of weakness in Cetire today. Let's go back here, looking at the markup. There's Tasmea. Oh, I really want to buy some shares in that company. Appen falling, not surprised to see some bit of profit taking there. And otherwise, nothing of note today, which means let's get to the top 5 stocks of the day. And we're going to start, let's see, we're going to start with Fortescue. Yes, Fortescue. Maybe I can also include the other iron ore companies, but Fortescue share price is up 6.3%. I'm wondering how much of the increase in Fortescue is because of the announcement. Fortescue leave her green equipment partnership. Was marked price sensitive, but I'm not sure that's doing all the heavy lifting. I doubt it. If we have a look at BHP, it's up. Let's have a look. BHP is up 3.64%. Rio Tinto's up 3.5%. So I'd assume that there is a little bit of extra excitement in Fortescue today because of this announcement. Maybe some investors just see the word green there and go, oh, I've got to buy some Fortescue shares. They're going green, that sort of silly thing. I wouldn't be surprised if that's happening today. I did actually open up this announcement and nothing really drew me in to Fortescue. But it's, do they have anything in here? Yeah, minus saw on ASX after China stimulus package, boosted by China's slate of new growth policy measures, along with a cut to its mortgage rate for existing housing loans. So Champion Iron is up 8.8%. Well, it was when they released this article. And gold's had a good day as well, looks like. West African Resources. In fact, I didn't even look at gold before. I did not have a look at gold, how it did perform. I always usually look at gold. Yeah, gold's up 1%, Resol's up 2.9%. So gold's had a pretty good day as well. And I'm not complaining about that. And yeah, in fact, they say here materials was the best performing sector or it should say is the best performing sector as the wider share market added 0.1%. Okay. And there's a bit of context. I like this. The numbers, the context, the sources. A UBS noted that fresh policy support from China on Tuesday offered Australian miners short-term relief. This has offered relief for equities, UBS said, but more is needed to appropriately stabilise property market activity and house prices. Westpac noted that commodities were the big winners from the announcement by China's central bank, with iron ore prices gaining on the new monetary stimulus aimed at supporting the property sector. Now, the question is, why isn't iron ore rallying as much as these iron ore companies? Don't know. Anyway, so let's have a look at the charts for these iron ore companies. In fact, I do have an iron ore watch list. So let's have a look at the iron ore watch list. And I'm assuming all iron ore companies are up. Well, BCI's down, SRK's down, JNO's down, but they're pretty small. Let's have a look at Fortescue first of all. Is this a time to get excited? So we have seen the share price rally. It's up $16 at the low, up to $19. So it's a nice little rally, 20% or so. It's just short of 20%. So that's a nice little rally in Fortescue. I would not call the downtrend at an end just yet. The share price has fallen, or did fall a fair bit from the last high to the low. In fact, it fell from $27 to $16. So this could be just a bit of a bounce. And maybe we're going to see more weakness in the future. So personally, I would not be that excited. It's also moving into a resistance zone right now. BHP, on the other hand, where is BHP here? There we go. It's doing the same thing, not saying this is the end of the downtrend to BHP, but it has moved higher than the previous high. So the successive lower highs we have seen has come to an end. So that's a good step in the right direction. And I'm assuming the same could be true for Rio Tinto. Yeah, the share price has really bounced for Rio Tinto. And let's have a look at Mount Gibson. Share price of this company really is pulled back. And Phoenix. Yeah, 2 good days in a row for Phoenix, bouncing off 24 cents. And I said if share price of this company gets below 24 cents, I might buy some shares. And I have not bought some shares. So that's Fortescue coming in at number 5 in the top 5 stocks of the day. In fact, maybe just iron ore could be the top stocks of the day, or the top 5 stocks of the day as a group of companies. Let's have a look at Codan. Why not? Codan, beautiful looking chart, share price flat. They made an acquisition announcement. And I thought, why not? This is a lot of investors like this company. And I think one of the reasons a lot of investors like this company is because of the chart. Share price has risen up a fair bit. So they're buying a company called SKT2 LLC DBA Gagworks, probably Gagworks for short. Completion expected in early December 2024. How much are they paying? What does Gagworks do? Gagworks is a leader, I'm not going to say global leader, a leader in tactical operator war networking communications. Okay, so this fits in the communications part of Codan that enable connectivity and integrated secure networking in the military environment. And how much are they paying for this acquisition? They've got a strategic rationale. acquisition consideration, 33.6 million, together with royalty payments for 5 years post-closing. This is the upfront acquisition consideration we funded from, existing debt facility, subject to government procurement cycles and purchase orders. Under Codan's ownership in the first 12 months, we expect revenue to be in the range of 49 to 57 million. If this level of revenue is achieved, Codan estimates calendar year 25 EBITDA between 8 and 11 million. So that's a nice 3 to 4 times EBITDA for the purchase price. In fact, they mentioned that. Based on the expected range of revenue and EBITDA forecast, the acquisition is priced at between 3.1 to 4.2 times EBITDA. So it's not that extreme. Now, it's not a big acquisition, so I can see why the market hasn't been that excited. They're not doing capital raising. It's a small acquisition, that sort of thing. But the main thing I like about Codan is the chart. A brilliant looking chart. And I'm not a shareholder, so I don't have any bias when it comes to this company right now. I was trading Codan and I sold out a little bit too quick. Got a little bit too trigger happy when it comes to Codan, locking in my profits, and the share price has kept on increasing up to nearly $16. Now, when you do look at the weekly chart for Codan, it's still shy of its highs, all-time highs at about $19 back in the middle of 2021. But you could have bought this company for $4 not that long ago. Yes, it's been a four-bagger since the lows. And if you do have a look at the longer-term chart, the share price was in a beautiful uptrend from 2016 through to 2021, so a 5-year period. So possibly this uptrend in the share price could last another 5 years. Possibly, don't know. It could end tomorrow. It could end in 5 years, maybe 10 years. But a beautiful looking chart. This is the sort of chart you want to see for a company in your portfolio. And I don't see it because it's not in my portfolio. Anyway, congratulations to Codan and shareholders of that company. That's coming in number 4, Codan. Number 3, we have Sigma Healthcare, down 2.82%. Pretty sure it was down a little bit more than that. Yeah. Share price has been all over the place. Opened at $1.46, so it was actually opened up for the day and has been low as $1.33, which means the share price was down about 6% at the low. So about up about 3% on open, down as much as 6% during the day. So a little bit of, I wouldn't say confusion about the results, but the market's not sure how to read the results. Half-year results. I do remember one. I did have a quick look at this, and there is a bit of a delay to the potential takeover. I'm going to call it reverse takeover of Sigma Healthcare by Chemist Warehouse. I'm pretty sure I read that in this. Let's have a look. I'm going to see if I can find it. There's also an outlook section here. The financial year 25 has started well with positive network sales momentum, digital store openings Australia internationally, and that's all they said. So the year has started well. This company does exist on fairly low margins. That's something you really have to understand. In fact, let's go up to the top. So here's the results for the first half. $1.8 million in revenue, EBITDA of $20 million, EBITDA 6.9, and profit of 13.7. That's normalized profit. So you can see, just compare the revenue to the EBITDA and profit. This company exists on really low margins. And I, in fact, would say that this is a low quality company because of that. Now, Chemist Warehouse could change that. I do like Chemist Warehouse, but I'm just a little bit concerned that the market likes it a little bit too much. And I think there will be a premium if this particular reverse takeover does go through. Now, I can't remember when I read it, but I did read somewhere that there's been a delay in is it ACCC who makes a decision about this particular takeover or reverse? I'm going to call it a merger. I'm not sure if they'd said it in this or I just read it somewhere. They would have said it in this, surely. Here we no, that's not it. I'm pretty sure if it's not in here. Here we go. This is it. Proposed merger announced on 11th of December 2023. So we're almost 9 months since that announcement. So 13th of June, ACCC released a statement of issues, and we continue to cooperate closely to address the issues identified. 24th of October, had been designated as the indicated date for the ACCC's decision, subject to change. If the merger is proved, there are several processes to execute to completion, including shareholder and court approval. I'm sure I read somewhere where that's been delayed. I'm going to see if maybe it was in this. Maybe it was in Capital Brief. I did read that. Or maybe I am just making things up. Merger, Chemist Warehouse, news. Chemist Warehouse profit soars as merger decision ticks closer. Chemist Warehouse annual profit has surged almost 80% to well over $500 million. Again, I think Chemist Warehouse is by far the biggest one here of the two companies, and that's why I'm saying it's a reverse takeover. ACCC call on Sigma Chemist Warehouse $8.8 billion tie-up due in 4 weeks. So maybe that October 24 is delayed. Maybe it was supposed to be earlier. Maybe it was supposed to be earlier. I just read somewhere where it's been delayed. Sigma, okay, here's one. Sigma first half profit drops on Chemist Warehouse merger costs. In fact, here it is. Last month, the ACCC or ACCC delayed decision over the proposed merger. That's last month ago. So maybe I'm thinking about a month ago. Anyway, let's move on to the chart for Sigma Healthcare. In fact, no, let's move on the chart. The numbers don't really matter because if this takeover goes through, Chemist Warehouse, it's all about Chemist Warehouse and their results. I did not see if there was any mention of how Chemist Warehouse is performing. There's no reason why it does. They do have to announce that sort of information here. Here you go, Chemist Warehouse, $574 million, up 33.7%, statutory profit before tax. It is interesting. They have got some numbers here. Chemist Warehouse results, really good growth. Profits nicely increase. And as I expected, I think this is a really high quality or potentially high quality company. And that's probably why the share price of Sigma has been on absolute tear since they announced it. Let's have a look. And but if this particular merger is not approved, the share price of Sigma Healthcare will drop significantly. That is a big risk. And the other thing I think, and this is just an opinion, whether Chemist Warehouse as a sole entity is valued right at current levels. I think there's a little bit too much, I wouldn't say froth, but a little bit too much excitement built into Sigma Healthcare's share price, even if the acquisition or merger does go through. So there's a lot of risk, and I'm not sure about the rewards. But I thought the same thing with Guzmán y Gómez, and the share price is still going up. Last time I looked, it's gone well past $30. So $38.56. In fact, it was above $40 for a while there. Anyway, so that's our Sigma Healthcare coming in at number 3. Coming in number 4. No, 2, not 3. 2 comes after 3, not 4. KMD Brands. Now, before I talk about this company's results, share price down a little bit, not that much. So they did release a preliminary final report. No announcement or no presentations, no media releases, just a preliminary final report. Now, there was a question, well, not a question, a comment in the comment section. Where is it here? Here it is from Chris Brown. Thanks for the KMD analysis. Always interesting to hear your point of view on it. I have no idea why the share price got as low as it did. I thought it was good value at around 50 to 60 cents. Just weak trading results, I guess. And the last result also showed a drop in sales also. I watched a few commentators on this company and they said it was not a good buy based on the comments you made. Very narrow profits. They commented on ROI being poor the last few years. I bought this company partly because it had a strong brand. Rip Curl is a leader in surfwear and KMD is well known. Also, the share price will recover if sales improve. As for margins, it might take another year or two for those to improve. It has not looked promising. Recently, they got hammered during COVID and had to do a capital raising. They now have more than twice the shares on issue. Okay, so let's have a look at KMD Brands and their results. For some reason, I just thought they released a presentation. I'm just going to have a look at market index. Just going to say, yeah, I was certain they released a presentation. For some reason, it's not showing up on ComSec. That's not good. I was certain they released a presentation because I opened it up and had a very quick look at it. Very quick look. And here we go. So this is the financial summary for KMD brands, and not good. Everything's down. So underlying EBITDA down 52.8%. Underlying profits now negative. But last year was 48.3 million. Oh no, that's statutory NPAT. So underlying profit is negative. That's not a good thing. And net debt 59.7 million, which actually has increased from last year. Now, one of the things I was looking for here, not necessarily how the different brands are going, but any sort of update. And they did provide an update somewhere here, because the most important thing here for these companies is how they're performing now and any sort of outlook. It's not the past performance that's important. It's whether things are turning around for the company. And they did mention here, improving quarterly sales trend. Now, still negative, but it's not as negative as it was. So Rip Curl was only negative 2.4% in the last quarter. It was as high as negative 13.2%. Kathmandu negative 6.9%, and Obol's negative 7.9%. But you see massive negative numbers each and every quarter. So what they're saying here is it's not as negative as it was not that long ago. So maybe things are improving. But that's the fourth quarter. What I wanted to see was, is there any indication how things are progressing right now? And I'm pretty sure they did give that, if I remember correctly. And here we go. No, it's not that. That's not what I remember. Here we go. I'm looking for percentages. Here we go. Yeah, this is what I was looking at. So they did provide a trading update here. So DTC sales for the first 8 weeks. What's DTC stand for? Trading. When you use acronyms, I'm stupid. DTC acronym. DTC acronym business direct to consumer. Okay. Direct to consumer sales. Thank you. For the first 8 weeks. Why do I want to say weeks? Weeks to September 22. Okay. So Kathmandu, Australia, up 2.1%. So remember, some of these divisions in fact, all the divisions had negative each and every quarter in financial year 24 had negative growth. Kathmandu, Australia, up 2.1%, although Kathmandu, New Zealand, down 23.2%. Kathmandu, 5.1% above the equivalent period last year. That's gross profit. Rip Curl, 5% lower year on year compared to financial year 24, negative 2.8% in a seasonally non-significant trading. But it doesn't matter. You're comparing like for like. Wholesale forward orders are monitoring from double-digit declines to single-digit declines. So things are still moving in the wrong direction, it seems, for the company. They've also mentioned possibly a returns to dividends. Okay, so let's have a look at the chart for Kathmandu. Not necessarily a great result, because I think if it was a great result or their outlooks were pretty good, the share price would have rallied, and then it's gone backwards. Now, there is some signs just by looking at the chart that things might be turning around. Now, when the share price did get to its low at 32 cents, there was a lot of volume at those levels. This is very similar than that other company was looking at. What was that? Fortescue. When the share price got to about $16 for that company, there was a lot of volume coming in. And we see the same signal here. So don't discount volume or a really big pickup in volume. It could highlight that the share price is near a low. And we've possibly seen that with KMD brands, and the share price has been decreasing since then. But the chart is starting to look a little bit more interesting. I wouldn't be surprised to see the low at 32 cents is the low for this company. Share price has increased roughly 50% since then. Not quite, but Wouldn't be surprised to see an uptrend developing in KMD brands. And if they did release some pretty good outlook numbers, I think today could have been that day for a confirmation that the share price is moving into an uptrend. But alas, that's not to be the case for KMD brands. Coming in number 2 and coming in number 1, it has to be PMV, Premier Investments, probably the worst named company on the ASX. Premier Investments, yeah, please call it something else. Down 10.63%. So not a premium investment right now. Shareholders are not happy. Share price down 10.6, although the share price has rallied a fair bit over the last few months. When I see a reaction like this and there's no context, you have to find the context. And that's where a site like Capital Brief pays off. I don't pay for Capital Brief. I just like the little blurbs on the side here. And I'm pretty sure it's mentioned here. Yeah, Premier Investment shares dive on financial year profit 4. Now, I'd probably reword that. Share price is not diving on financial year profit 4. They missed expectations. So EMP's retail analysis, Philip Kimber, said expects downgrades of around 5% to consensus NPAT estimates in financial year 25, given Premier's financial year 24 NPAT result missed forecasts and that the company reported a slow start to financial year 25. So I did not go through Premier Investments results at all. So I just had a look at this, and there's no reason for me to think this is wrong. The results were below forecasts, below expectations, and they reported a slow start to financial year 25. So let's have a look at results for Premier Investments. So profit of 257.9. There's no comparison here. I like tables. And there's no table there. I don't like that sort of announcement. Let's have a look at their presentation. It's just words. I'm a very simple person. I like tables because table makes everything clear. And let's hope they have got a table. Yeah, this is good enough. Okay. Okay, so Premier Retail down 8.6% versus financial year 23. Interesting, they've got up 94.8% versus financial year 19. I don't care. I don't care how you compared to 5 years ago. That's just ridiculous. Premium NPAT down, adjusted NPAT down. Dividends looks like they're increased. So the dividend payout ratio is probably increased a little bit. They've got a Breville investment. I am a Breville shareholder. They're doing fine. My investment, not sure I like that investment. A little bit of property as well, interesting enough. Franking credit pool, don't care about that at all. Sales down a little bit, but again, compared to financial year 19, up 25.5%. This is what I like, when they separate the different companies within the business. So we have Peter Alexander, Smiggle, and Apparel Brands. One reason I'm really following Premier Retail or Premier Investments right now is when they might demerge Peter Alexander and Smiggle. If I had the choice, Peter Alexander first, Smiggle second, Apparel Brands dead last. Not only dead last, I would sell that immediately. Anyway, and Peter Alexander's had a good year, up 6.2% sales. Smiggle, negative 7.4%. So maybe Smiggle has lost its gloss. And Apparel Brands down 6.4%. So Peter Alexander, in my opinion, is a star performer out of this company. Sales up 6.2%. So if they had spun off Peter Alexander, I would expect the share price and the valuation of this part of the business to be quite high. Online sales down to minus 2.9%. And that's all, but they must have some sort of outlook here. Now, this is a problem when you haven't gone through an announcement and you just expect it to be there. Strategic review update. Okay. Actually, I did see that they've delayed the possible demerger of Smiggle. Yeah, they mentioned just down here. The board continues to see merit in the potential demerger of Peter Alexander and Smiggle. However, due to the current prioritization of the proposed received from Myer, the board is no longer working towards the demerger of Smiggle by the end of January 2025. The ultimate timing of any demerger of Peter Alexander and or Smiggle will depend on the outcome of the current discussions with Myer. And that's another reason, or maybe that's partly one of the reasons why the share price is down, because of that delayed. And the other thing I want to see is any sort of trading update. Did they have like a yeah, here we go. There's no trading update there. I'm just going to see, because they did mention here and in Capital Brief that the company reported a slow start to financial year 25. So I would expect that somewhere to be in here. Maybe it's right at the end. No, this is just appendices. And do we have some sort of trading update here? No, don't see it. Maybe it's in this section. No. Maybe I completely missed it. Anyway, I'm assuming that Capital Brief is right, and the start to financial year 25 has been slow for premium investments. And that company comes in number, although let's have a look at the chart. Before I do that, sign off, let's have a look at the chart. And oh, yes, share price has been an uptrend. Now, I'm not saying this is the end to the downtrend, but this sort of day is not good. And I would not be surprised to see this is the end of the downtrend. If we move forward in time, that this was a day. This was a day where the downtrend or the uptrend in premium investments has come to an end. Not a lot of volume, so the volume has been quite low, but yeah, a negative day for premium investments. And now I'm just going to have a look at a few charts. And I did put down 5. So let's have a look. CBA. 2 big down days in a row, but the uptrend is still there. The uptrend is still in place for CBA, but 2 big down days in a row. This could be a buy the dip situation. Maybe with the share price falling from 144 to 135, some people out there will go, oh, the share price has fallen. Now's a good time to buy CBA, even though the company is still significantly overvalued. And I'm assuming the other banks are looking similar. And I just think there is a rotation from the banks into the mining companies. Yeah, all the banks are going to look similar. Still in uptrends, but the uptrend is starting to look a little bit weaker, but potential buy the dip situation. So, oh, Westpac doesn't look as bad. For some reason, Westpac share price is not down as much today. Don't know why. Maybe there's been a bit of rotation from CBA and NAB into Westpac. And ANZ down 1.21%. And that still looks pretty good. Not that bad. Anyway, let's have a look at some of your comments because I have a little bit of time left. So I've already talked about KMD brands. So let's start off with Chris Brown again. Agree with your comments about property. Australia seems to be similar to Canada in that we are selling out our own citizens for the benefit of wealthy investors. Both countries are increasing migration despite housing shortages, cost of living, and affordability in Canada is totally out of control. Australia is following suit. I would say Australia and Canada are very similar. We are like twins. Australia and Canada are twins. We rely on mining. I believe if you have a look at the TSX, it's full of mining companies and financials. I would assume that's pretty true. Populations are not that different. Canada has slightly, well, I suppose 14 million is not slightly more, but similar populations, big, large land masses, and the very fact that we do rely on mining is one of the reasons why I do think we are similar. People in charge care, and also part of the Commonwealth. People in charge care little about the average Australian. We have increasing levels of corruption. The business community's faith is in free markets and being part of the neoliberal global economy, which has produced massive inequality. Neoliberal values, people are resource and homes are primarily assets. Homelessness has many factors, not just affordability. Australia does not have a chronic problem with it, unlike the USA. That's true. Los Angeles has 75,000 homeless and has parts of the city with miles of tents and homeless. Not a good result at all. I would say homelessness is a massive issue. Yeah, not as big an issue here, but it is an issue in the United States. And I do judge a company or country of how they treat their homeless. And I do believe that having a place to live is a human right. And the problems we've seen over the past 30, 40 years is that we treat property as an investment. And I don't think that is benefiting anyone. Now, it has made some people really, really rich, but that only benefits those people. Well, I suppose it benefits those people for as long as possible, but it doesn't benefit the future generations because it is becoming harder and harder for people to get property. Now, and that's the truth. There was a few comments that I deleted from some guy saying, no, it's always been like this. But it's not true. If you have a look at housing prices versus wages or something, I'm not sure what you put here. Which one? What would I put? Income, disposable income. There's no argument when you look at any sort of image. Here we go. It's becoming worse and worse and worse. So disposable income's going like that, and property's going like that. And that's what you see in all these charts. USA is not as bad, but Canada and USA are bad. So we can see here one for USA. It's not as bad. Here we have one. House prices versus per capita income. Okay, it's not the one I want. Is this the one I want? Yeah, this one. This one's, yeah. And this one's from the Reserve Bank of Australia. I mean, this one points out perfectly that house prices have accelerated at a much greater rate than wages or real average household income. So for that person who said, oh, it's always been like this. No, it's not. There's been a significant change in the last 30 years. And you could argue maybe this has to do with interest rates, but eventually there will be significant civil unrest if this continues. That if real house prices keep on going up at a much greater rate than average household income, because young people won't be able to afford houses. And then the other argument this person said was, well, just use the bank of mum and dad. But that's extraordinary. That leads to a massive amount of inequality, huge amount of inequality that only the rich and those who have rich parents can afford housing. Is that the world we want to live in? No. So eventually there has to be an equilibrium. There has to be a reversion to the mean. The reversion to the mean will happen two ways. Real house prices go down or real average household income goes up. They have to eventually meet. So who knows which way it's going to go. But eventually it's going to have to happen. Real house property prices could go down to meet average income, but I don't think that would be popular. A lot of people won't like that. Or it could go sideways for a long time. I think that's the most likely. House prices could go sideways or up very slowly, and over time, eventually, average household incomes will meet that. Anyway, so for that person who said, "Yeah, it's always been like this," it's no different than the last 100 years. Absolute BS, and this is the proof that there is a bit of a disconnect between household income and house prices. Anyway, thank you for that comment. So I've gone on a bit of a rant, and I'm pretty sure that's exactly true for Canada. Canada versus USA. Let's have a look. Canada, USA. Let's see. Yeah. Oh, this could be a good one. This is from Reddit. Yeah, here we go. This is exactly. So look at Canada. That's almost identical to Australia. Look at United States. That's the way it should be. Now, that goes to maybe 2020. Maybe it's changed in USA now. But that's exactly the way it should be. You can see housing prices and disposable income have increased almost at the same rate. But in Canada, Australia, no, it's been completely different. In fact, Canada, this has been true since 2000. Pretty sure Australia, it goes back a little bit more. But before 2000, Canada, it was fine. Yeah, anyway. So anyone who says differently, we've got proof. We've got proof. Anyway, oh, this one. Oh, no, it's the same one. Jason Nimmo, did you push the wrong button today, mate? Everyone was freaking out on the beach today in Port Douglas, screaming tsunami. That's not me. I don't do that. I don't do the tsunami. After the Boxing Day tsunami, we have completely overreacted to tsunamis. We have put a few warnings out, I believe, and for very small tsunamis. Eventually, one day, a huge tsunami will hit the Australian coastline, but probably based off probability, it won't be until we're all dead. Well, I'm talking about 300, 400 years from now. So I think we have significantly overreacted Now, there are some places in the world that need to have warning systems. Australia is not one of those places. So I'm not sure what happened here in Port Douglas, but you're not going to be affected by a tsunami. Although the last really big tsunami in Australia, I believe, happened in North Queensland. I'm trying to remember the evidence. There was maybe 600 years ago. There might have been a big tsunami in northern Queensland, which makes sense because the area, the Pacific Island areas, that's where you do see tsunamis. Solomon Islands, Vanuatu, that sort of area. So you can see earthquakes there, which could lead to tsunamis. But all along the coastline of northern Queensland, you are protected by the reef in a way. Anyway, that's not me. I don't do that sort of thing. I'm aviation. I do forecasts for airports. Jin K 9225. I think Swoop will double up. It might not. Who knows? I am a Swoop shareholder, by the way. Oh, I did that video years ago. 2 years on the ASX. Swoop. James Dean died in 1955. Please do an update on Neuren Pharmaceuticals. Thank you. I'm just going to talk about the chart because the chart looks pretty bad. Chart looks pretty bad for Neuren Pharmaceuticals. After a long-term uptrend, a couple of times it looked like the uptrend was maybe coming to an end, but I think the uptrend is at an end right now. The share price did have a little bit of a bounce the other day, but you can just see the problems. When the share price is in a downtrend and when the share price tries to bounce, because of all the resistance, the share price just falters and pulls back. That's exactly what we saw with Neuren Pharmaceuticals. So share price is going sideways now. It's been going sideways for about 3 weeks. Hopefully that's going to continue going sideways. So all the shareholders who bought at high prices, who thinks this company is now a dog stock. Yes, many of the shareholders who bought this company at a high price thinks Neuren Pharmaceuticals is a dog stock because the share price has fallen from when they bought. That is the mentality of many investors. And that's the whole reason we have resistance, because they want to sell when they see the share price rally. And the share price rallied into a resistance zone. Anyway, share price, the chart looks pretty weak for Neuren Pharmaceuticals. I'm a long-term shareholder of this company. I've taken profits. I am not going to sell my shares because there is a lot of potential around this company. They might not realize the potential for another few years, but there's a lot of potential underlying this company. Any thoughts on why IDP education is heavily shorted? Yes, I do have some ideas around that. It's because of government regulations, and I'm pretty sure, like Canada, wasn't there talk of significant changes in government regulations over there? IBT education, why shorted? I'm going to see if there's any articles on this. Or that's images, or interesting enough, why short sellers could be wrong on Pilbara and IDP. Well, they could be wrong. They also could be right. Right. Here we go. IDP education plunged after the full extent of immigration restrictions in Australia, Canada, and Britain became clear. One of the reasons I don't like a company like IDP Education is they are reliant on government regulation. And who knows what's going to happen in the future when it comes to education and people coming in from other countries into Australia, Canada, and Britain. So that's one of the reasons why. But eventually, they will have to cover their shorts probably. And the share price could bounce, just like Satire. And share price still in a big downtrend, but possibly the downtrend is coming to an end for IDP Education, just based off this. So possibly, just possibly, they are starting to cover their shorts. I probably would be if I was shorting it, but I've never shorted anything, and more than likely, I will never short anything. I just see there's too much risk shorting. Oh, no, it's actually shorts are going up again. And when's the last short day? 19th of September. Shorts are going up again. Now, I could be wrong. Maybe there's another reason why they're shorting IDP Education, but I still think it's mostly to do with a lot of uncertainty when it comes to regulations and government regulations and sort of pulling a lid on immigration. Mr. Martizamo, love your daily analysis. Could you have a look at South 32, which has been very positive recently after a long, slow decline. Do you think the banks have had their day for a while? Most seem to be on very high P ratios. Well, I've talked about that a lot. Yes. Not only P ratios, have a look at price to book ratios when it comes to the banks. And CBA is still above 3, which signifies it is extremely overvalued. Now, just because they're overvalued doesn't mean the share price can't keep on going up, because the market can remain irrational for a long time. But I do think there's a signs that there's a bit of rotation out of banks right now. South 32, I have a soft place in my heart for South 32 because I did a nice trade with this company a few years ago. I won't talk about that now, but I always liked South 32. So this is a nice bounce. I think the downtrend has come to an end, without doubt. Downtrend came to an end back in April, though, but you can see a lot of volatility, funny enough. So if you just extend the downtrend line, the share price bounced off the downtrend line back in the start of August at $2.80. So I have not been paying attention to that, but it bounced off it perfectly. So I do like this. When you do have a downtrend line, just continue that downtrend line. Again, sometimes that downtrend line will act as resistance with the share prices below it, but then acts as support if the share price gets above it. And that's exactly what happened to South 32 back at the start of August. Now, a lot of volatility here. You can see share price up and down. And the other thing to note is at about 280 is was a nice support level as well. So you had the share price bouncing off the downtrend line, but also bouncing off a support level at $2.80. Share price has really taken off. Yeah, that's true. Is that rational? That's the other thing. I don't know. We saw the same thing happen not that long ago. Between March and June, share price went into an uptrend and then pulled all the way back. I don't know which way this is going. I personally would not trade this. There's just too much volatility over the past about 5 or 6 months. And there's a lot of opportunities in the market. So I would stay clear. But it doesn't mean you have to stay clear. If you like the chart, yeah, go for it, because there's a lot of opportunities on the market. And I'd probably push back on the slow decline. Maybe way back for a year it was declining. I wouldn't say that's slow. And then the share price dropped from $4 to $2.80 was not slow. That was quite rapid. It fell. The high was 3rd of June and the low was 8th of August. So in 2 months, share price dropped from $4 to $2.80. That's, in my opinion, not a slow decline. That's a pretty quick decline. And I want to get through all these. Coles bashing by ACCC. Pricing increases, shelf price goes up. Then Coles try to help consumers for a period of time, usually 3 months, sometimes to compete with Audi prices. Don't know Woolworths, but IGA do the same with Price Match. Tabcorp have already paid dividend, just got my payment slip a few days ago. I think it's ridiculous, this Coles and Woolworths bashing, not only from the ACCC, but also the media and politicians. I think the politicians should be going after the insurance companies. Our insurance premiums have skyrocketed, and the profits they are now receiving are ridiculous. But in saying that, we live in a democracy, a capitalistic democracy, and if other companies or other potential companies see excessive profits in a sector like insurance, we should see increasing competition. And that's how capitalism works. Will we see that in insurance? I don't know. But I really think politicians should be going after insurance companies because they pushed up their premiums way too high. Are we going to see them decrease premiums? Of course not. Anyway, I would prefer them to go over those sort of companies. Although I did see that one of the reasons ACCC or ACCC is going after Coles and Woolworths is because they said they were lowering prices, but instead they raised them. Not sure how true that is, but I just think this is, I wouldn't call it a witch hunt, but I just don't like it. I'm not a big fan. 9 slide glide. Interest rate cuts today in China further supported the Clover Corporation result. And other China-facing stocks also received the boost. A2 Milk and EZ. That's a pretty good. I like that. Yeah, I've noticed EZZ has just gone on a massive run. Although, I mean, the results for this company are pretty good. and well, a little bit of a pullback today, but nothing too extreme. But that's a nice looking chart. A2 milk. I think this one's in a downtrend. Oh yeah, share price did increase yesterday by 4.4%. So I think there is a bit of truth to that. But yeah, how much of a benefit is it really going to be to A2 milk? Interest rates in China might have decreased. I'm not sure. I think the market is overreacting just a tad. Stu Percy, Microsoft announcement, uranium up. Yes, uranium is up. In fact, it went up again. No, it didn't. I don't think it did. I'm feeling uranium did not go up. Let me have a look. See, I have to find it first. There it is. This is the Sprott physical uranium. Oh, it's up a little bit, but yeah, nice couple of days rally for uranium. Anyway, this particular video has gone on a little bit longer than expected at 1 hour and 5 minutes. If you have any questions, any thoughts, leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.